Hello traders, Gary Wagner here. Approximately 12 noon in Honolulu, meaning 5 o'clock in New York City on Wednesday, the 11th day of January 2012. And this is the daily report for gold and silver. We do have a nice move in the precious metals markets. Gold is trading up. It's firmed up about $6 to $9 higher, currently trading 1640, 1641, putting it up $5 to $6. Silver, although, is really unchanged on the day. It's showing an uptick, 29.93, and that's putting it up anywhere between, on the day, 2 and 3 cents. We have the dollar higher, and we have our equities markets higher. First market I do want to look at, and I want to look at it in a couple of different ways, of course, is going to be the gold market. But I want to start with a weekly chart. It's a standard candlestick chart. And what I find interesting when we take a look at this market, this is the low that we had a couple of weeks back when we look at it, 1523. When we take a current look, we are really at the top of the range roughly 3 weeks later, although this is just the beginning of the week, or the third week, I should say. When we take a look at the pattern itself, let me go ahead and change this pointer back to a pointer. But when we take a look at the pattern itself, what we get on a weekly chart, and this, of course, is a more long-term pattern, is what's known as an engulfing bullish confirmation. An engulfing bullish is simply a 2-day pattern. It begins as the market is in a downtrend. That is the first criteria for development of the pattern. Then the next criteria is you have to have a long red-bodied candle, a down candle, and you're getting that right here. The following candle has to open below in the case of a continuous market like cash, so it opens at, and then it must close above to completely engulf or surround one body from the other, and you get that right in here. Now, on the following candle, what you really want to see is confirmation, and confirmation is simply going to be a higher closing candle, in this case because we draw it in green, and you want to see a higher high and a higher low. We're getting both those in the weekly. That's a good, strong indication that we might have a nice rally on our hands. When we look at it in that way, we then start to look for targets, and I look for targets really based in two ways. One is straightforward Fibonacci, and the second is just old-fashioned trend analysis. We look for tops and bottoms in the market, such as this. You have this series of bottoms right in here, and so that's going to initially be some sort of resistance, and we'll want to see it break, and it's just below 1700, call it about 1680. So that's going to be one target we're going to want to look at. The next way that I want to look at this market is going to be from our standard 2 daily candlestick chart, and we'll probably convert it into a Henkin in a little bit, but I want to look at a couple of different areas. And I talked about two different parts that I really needed to see it overcome. The first one was at 25. We did that brilliantly and very nicely the other day. You can see we had a series of tops. This is the area that we needed to overcome. You can see that we had it in terms of, call it straightforward congestion, or when it was trading in a narrow range, you could see that really needed to break out above that, and it certainly did that. What is our next target? Well, our next target's pretty clear. It's going to be 1645. We really need to take this out. Why is it resistance? Well, we can see it in a couple of different ways. One of the ways that you can certainly see it in is when you take a look at this top here. There can be no doubt, but the marketplace itself came up, it went to, this is the high of the day, but the body never closed anywhere near that area. Now, if we go ahead and look at this market right now, you can see that we've had a high that just breached above it. Our current print is not at it. So that, to me, without a shadow of a doubt, is resistance in the marketplace itself. When we look at our 2-day pattern at the bottom, we also get an engulfing bullish, but we get that tremendous breakout, a little bit of side congestion, and then over the last 2 days, we have seen this market moving higher again. One other thing that's worth noting, if you recall back when we had that gap in the marketplace, that's just above this area. So that might also prove to be an interesting area when we look at this market. Let's get over to silver, because silver's a little bit different. Silver had a tremendous rally the other day, but today we're pretty much unchanged. And what I'm finding is the candlestick that we have currently is a doji. Now, a doji is typically indicative of a market in consolidation and a market that's about to reverse. However, what I have noticed is that, especially in the case of the precious metals markets, when they run hard to the upside, they consolidate. Really, it's a breather. They take some room, they rest, and then they spurt back up again. So we'll have to see. Hard resistance again is going to be at 30.84. We're far away from that. We've got to close above 30 first, and we'll have to see how the reaction is there. I have a little bit concerned just on a technical basis when I see these dojis. But as I said, at the same time, in the metals markets, we do see this candle type really before a rest. But traders, we also see them before breaks to the downside also. Now we'll have to see how that pans out over the next few days. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.